All right, guten Morgen. It's 6:32 on Wall Street, about 3 hours before the open of trading. So this is your hour of power. It's where we get our global macro on and uncover the best fundamental investment opportunities around the globe. We look at the long-term economics, but we look at short-term market forces. Ideally, we can combine them together. That's cool. Very, very, very cool. We're in particular in likely a transition point in the markets, but also in the economy. So it's even extra trickier than usual. But luckily, we have hardcore data in which we can make informed investment decisions. Anyways, hey, YouTubers, it's $8 for a trial. You should check it out. It's pretty good. Think you'll like it. Huh? Do your trade plans take in 20-year averages? Probably not. Do you do technicals? Yeah, probably, but you're probably stuck on a 15-minute chart, YouTuber. Well, we look at longer-term trends and try to align all these things. Institutional positioning, retail positioning, economic data. Very cool. Anyways, we got lots of good things to help you make good decisions. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus in the long term, never risk money you cannot afford to lose. Jim says, interesting, one of the VC stuff. No, actually, that was a hobby of mine. Yeah, it was just a pet project. I think I had to close it down because of the financial crisis, the GFC. Yeah, it was a cool gig. It had a lot of potential. Anyways, let us log in. Now, I have built upgrades, and I'm not going to have time to show them to you. Last time I made all those upgrades, it took me 3 months to just show you. I'm in a similar situation. I don't think I can do it today. I have a meeting at the St. Louis Fed this afternoon, and I'm just trying to squeeze my agenda in together and try to get everything done. And I'm just like, am I going to be able to set up a launch for this stuff tomorrow? Probably not. But anyways, keep your ears to the ground. Sometime soon, I'd like to show you what we've done on your behalf. Also, for those that have upgraded their account to the AI alert service, we've moved one incremental step closer. We're still having trouble in the logic of separating what is, interesting or good information versus imperative you need to know right this second. 2 o'clock in the morning, ping your cell phone kind of news, right? But here's what will change today at 9:28. You're going to get an email, and it'll be a daily summary of everything it saw. Some of them will be sort of the stuff that would be sent to you via text, and some of it will just be like the highlight. Very, very soon, you'll get updates twice a day, pre-London, pre-New York, of what's changed. And then the stuff that says like AI trade alert with little asterisks everywhere, that will be the stuff that will be sent to you via text. So anyway, stuff's happening, and that will be done. So anyways, like I said, right now it'll just be, and I mean maybe for a week, it'll just be once a day. And then you'll get twice a day as we break that out. And then the text stuff will launch as I buy more phone numbers. Cool. So anyways, it's happening. I know it's slow as molasses on a cold Georgia morning, but it's kind of like that, right? Can happen. All right. Let's take a look at the world. So, whoa, yields are going up. That's not so good. Oil recovering. That's okay. Gold back more bearish. It was lower than that earlier, but we'll see. Anyway, so yeah, a little risk off, and not enough to really call it risk off. Just, Okay, remember this was 110 and then 119 and then it was 18. Now we're getting closer and closer to actually 107. So you can see that it's likely dollar strength going on. Although the ECB is, set to cut interest rates before everybody, maybe. And that gives you some euro weakness. Okay. And then Bitcoin just kind of going nowhere. Currently, the risk evaluation is mixed. Huh. Well, hills bells. Still crosses are leading our opportunities. Pound Kiwi, pound Aussie, Aussie Swissy, Aussie dollar, Aussie CAD. Hey, do you think Aussie's weak? Yeah. Look over here. Aussie and Kiwi weak versus that pound. And then maybe some yens up, yens up, yens up. Maybe. We know this USD yen is at a technical psychological level. It's not just 150, but this area between 150, 151, 152. They're very, 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 very big levels of resistance. Wowzer. So we're getting closer to that. Japanese stock market still going up. US stock market still going up. Everything is exactly as it has been. For example, everything's up except FTSE. FTSE. That little blue line down is not going up, but everyone else has the stock market rising. Take a look at the broad market. Yeah, nothing's really happening. Just ever so slightly risk off on the medium term. But it's just ever so slightly because there's nothing on the short term and nothing on the long term. This could just bloop, go back to mixed. So I wouldn't get too excited yet about anything going on. It's been mixed for weeks now. What is this, week 3, week 4? Hey, well, better than losing a ton of money. At least you know reality. So when there's no underlying intrinsic trend, as I covered in great detail yesterday, it doesn't mean don't trade. It means don't trade trending pairs. Okay? So therefore, you want to look at cross pairs on QuantBox, and I actually separate those pairs that way. So if you look left, you probably, in a situation like this, you may not instantly go to dollar pairs. You may not instantly go to yen pairs, but you might want to check out these cross pairs because that ends up being a relative strength exercise, not a trending exercise. So anyways, the evaluation, taking a look here, let's go longer term. S&P 500 on the longer term is still up 5%, even though it's stopped going up recently. Okay, so stock market going up, that's good. VIX, flat, neither here nor there. Gold, flat, neither here nor there. Yen, weak by only 2%. For an entire month, that's not a lot, but hey, that's good. That's risk on. Yields are rising again. Well, that's bad. Dollar is strong again. Well, that's bad. And there you go. For a score of 0. All right. So there's stuff happening, but there's no trend. It's financial dissidence. Hey, where did my water go? New Year's resolution, drink water this year. All right, cool. I'm going to put that over there. Maybe I'll drink some water. Cool. All right. Scatter plot. Let's take a look at the market. And some bearishness that's not desired, some bullishness that's not desired. And then lots of things flat. Okay, these are down, but not by much. These are up, but not by much. The biggest winner is only up. That's it. 0.5%. Excuse me. Yeah, only 0.5%. Not that big of a deal. Bitcoin hasn't moved 2% or something like that. So really, like, even if you take some of these bigger movers, excuse me, sorry. Me. Me. 20 dwarves, 20 dwarves. All right. Even when you take out the outliers, Dow's down. That's interesting, huh? S&P 500 is down. That's interesting. The USD Rand is down. That doesn't make any sense. So anyways, that's the whole problem. And they're not down by much, so it could just be noise. We have the new calendar? I doubt it. No, we don't have the new calendar. Interest rates, yeah, 4.35 in Australia. Crikey. Whatever. Just gonna mix things around. Still very heavily long Swissy pairs, huh? This is retail, long pound Swissy, long Aussie Swissy, long Euro Swissy, long CAD Swissy. Institutional, though, long Japanese stock market, long gold. Remember parking on it, probably still long Dow, still long oil. NASI's coming down, though, I think, huh? Still short yields. Still short yen. Look at that, just incredibly short Aussie. And then, of course, this is very, very interesting how people have been rolling out of S&P 500. Well, by people, I mean institutions. I guess they're real people too. Interesting, huh? Uh, money coming out of the SPX. Yeah, they actually agree. Interesting. Let's take a look and see what it's thinking. So this is nice because I'm so in tune with short time frames as a trader that sometimes you got to have the machine back out and have you look at the same forest, if you will, but through the eyes of an investor, not necessarily a trader. And there's still a lot of bullishness left in here. Now, I do recall that the slope of the worst case bullish scenario, it used to be above the 20-day simple moving average, and now it's slightly below the 20-day simple moving average. Is saying that bulls might start buying around 48888 and then stabilize. Average price is right here. I don't think we really care, honestly, but it takes more time to remove it. So it's okay. So up, down, down, up, down, down. Okay, reset off the moving average. Okay, great. Higher high, higher low. But the thing is, are we heading all the way back down to 48 and a half? That's upset topishness. So if we were to put that in the English language, let me move this to grayish. Okay. This move here, if it ended up coming like this, then what I'm interested in is the idea that this double bottom is a 100% retracement from the top. And if that occurs, then you start looking for, uh, like that. So that hasn't happened yet, but I feel that's dangerous, isn't it? I feel like it could happen. So I'm kind of watching for it. And so if QuantBox says, well, if you analyze this daily chart, there's a reasonable chance it comes down to 4888, but 4850, if it just continues down one more, it's going to change the slope of all these projections. Because remember, it updates every time you get a new data point. So it's not like it'll say, okay, Wayne, well, it'll just come down and then go at this parallel. No, these parallels will change and it'll flatten out or even go negative, and then you'll have sort of eventually start sloping this way. And that's the concern. And so, and we know that it's seasonal to top out. QuantBox points all that out. We know there's a psychological level of 5,000 up there. So, when you add seasonality and all that kind of stuff, and we also know, again, because of QuantBox, that the Fed has changed their monetary policy, and but they're not, or let's say the market's perception of the policy has changed. So the Fed was perceived to have a cut, which would push this up. And now the Fed is perceived to not have a cut that's imminent. So you could have the down before the up. I will buy this. I will buy more. I have cash waiting and I'm going to add more cash, but not today. I demand a discount. 5% would be fine. Hard bargain, right? A hard negotiator. Give me a 5% discount. Yeah. You imagine you're buying a Ferrari or something, and you're like, well, I won't buy it unless you come down 5%. They're like, okay, and I'll throw in a free latte, These tools I'm deciding to kill or fix, and I might kill them. Do you guys ever use the carry trade tool, or you just know? Some of it is, yeah, so I had them update it, the developers, but I'm thinking about killing it. Is it helpful? I like this table. I don't know what the heck this does. Yeah, so I want to kill that. And I kind of like comparing like Australia versus Switzerland, for example. Yeah, no, do you guys use it? I, it's got potential, but it's primitive. This is one of the first tools, right? Even QuantBox when it was in beta, but it hasn't been reinvested in. So maybe I put that on the priority list. No, you do? Nobody's responding. No, I guess that's a no. Yeah, this is right. Well, it was interest rates, the difference between interest rates. Now, this is the different levels, right, of inflation. So you can very quickly see low inflation in Switzerland, high inflation in, right? But that's report date. That doesn't seem right, does it? No, no, no. That seems probably right. That doesn't seem right. So, anyways, I'll have to put some new money into it if we're going to keep it. I might just kill it. So we have some new tools coming out that could beat this hands down. This is looking at unemployment, right? Employment levels around the world. So you could see Switzerland has very low unemployment. Eurozone and Canada have pretty high unemployment. There's the US of A. So it's a good way to just kind of very quickly, quick and dirty, to see where everything is, right? So you could compare like look at this. This is funny. Yes. Anyways, you can compare like the UK to Japan and Switzerland. Get fairly primitive, and I have something better coming, so I might just end up killing these things instead of supporting them. Yeah, but Porto, was that number accurate? The 6.3. I don't think that was accurate. That's the thing. So I don't know. This is such an old tool. I don't know if we're pulling the data from the proper table anymore. And if with new tools being designed, we just kind of let those go obsolete, and then it won't update here. So I wasn't sure. Yeah, I don't see that. That my hunch is that's not correct. Or the inflation, like Europe doesn't have 6.1% inflation. So we could quickly like look at euro here. Unemployment's 6.4, but inflation is 2.8. See, you're like, whoa, what? Yeah. So yeah, it's not correct. Yeah. So I have to, retire those, I think. Okay. All right, cool. So, anyways, euro dollar coming down, projected to come down to 107. It's ever so slightly tilted toward the bearish side. Technically, it's bearish. Technically, it should be, or seasonally, there's a little more bearishness yet. Okay. Now, January was up, but can you see like how unusual that is compared to the 5-year average and the 20-year average? Yeah. So we should know that that upward move we had in early January is unusual. So it was likely related to the dollar, not the euro. It was likely um, related to the market's anticipation that the Fed would cut in March, which is now gone, but that, or that is, typical of a federal election year in the United States. There's some uniqueness this year. Some of it we didn't expect, but some of it we did expect. One of the things we talked about even 6 months ago was that because of the election in November, and because of the election in November, there's sort of a hesitation to invest in the normal cycle here in September. So even though we know the 5-year average and the 20-year average, we know usually, though, on this 4th year of a political election cycle, that the rally occurs in November, not September. Well, if you knew the money wasn't going to rally early, right, and you had to wait later, then it kind of forces your hand where you got to play now early in the year because your September move's not going to happen. So maybe if you think there's a March move, you do it sooner than later. You got to deploy to catch this rally, which is March. So if you know you're going to do it March and you're trying to front run everybody, and more people are going to go long in March than usual because of the election, well, then you want to go before March because you're trying to front run everybody, and all of a sudden the game, the whole dynamics of the game, if you will, changes. So maybe that's what's happening, and we saw it. Nonetheless, it's a reasonably complicated year, or at least it's usually unusual. The unusualness is usual. And you're going to say, well, Wayne, why don't you just have a tool that only shows the average moves on the 4th year of every political cycle? You're like, let me think about it. No, but at least I'm here to tell you, like, it's likely to be a little different than usual. So, anyways, So yeah, I will unlock these and retire these. Is the idea. And oh yeah, stock market coming down. Cool. There's that top. Nice. So we had a big move yesterday and then gave all of it back. And now maybe try again, but top, 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 top. Sound like a seagull. Well, technically, what do you stink? Is it eventually going to do that? Clearly, there's a top. I'll extend this out, but that's been there for a while. Yeah. Yeah. Hmm. And that's what QuantBox was, pointing to. If the stock market, if that Nasdaq comes down, that's the normal seasonality. And then if the stock market's coming down, you'd expect euro dollar to be, excuse me, to be coming down. We can look at SPX and then see what's happening now. Yeah, that's the longer term move. Yeah. So this is the bar version instead of doing the line version. You should let me know your preference. Okay. You can see later on in the year from that sort of March area, you kind of get a move like that. So January was very bullish this year. February, just so far, modestly. Yeah. And then let me go back out and we'll pull up S&P 500 now. And I have it this way from the beginning of the year. Now, a little bit different than, right? Lucas says, I like the line. Yeah, and you like the bar. Yeah, I think I lean on the line too. I kind of like the shape. I don't want to. Yeah, I just want to kind of a general flow versus. I don't like it telling me like this month is does this and that month does that. I like it more kind of general shape of the year, but to each his own, right? Yeah, Sharky goes with the line. Yeah. I suppose when you if I mean I know we're just having fun, but we can address that when you go to seasonality and you do that tool instead. So we'll pick the yen. We'll just pick USD yen. Okay, so there's your candles, but weekly instead of monthly. Zoom in, and then there's the shape of the year too. When you add this, and then these are negative numbers, and then you start adding positive numbers, but you know this is becoming more and more negative. Negative plus a negative is a bigger negative, plus a big negative is even bigger negative, plus a positive is slightly a big negative, and then a big negative, and it's and eventually, though, it starts to become positive as it accumulates. Boop, 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 boop. And excuse me. I like this from the bar point of view, the accumulation of adding all these things up. And so Maybe there's sort of that's where if you prefer one over the other, you kind of get both over here. So around, the bottom of this is around week, kind of where we are now. Now you probably want to figure out, is it dollar strength or is it yen weakness? Anyways, let's go back to the stock market because this is going to dominate my trading today. And so in our mind, we know we have like a massive top on NASDAQ. This is quite different, right? This is actually sloping, lower low, lower high type action. And that leans me now as a technician to be more bearish. Lucas says, could you make it alphabetical order? You would assume that that would be easy and straightforward, right? um, hmm. It might not be. So, but most of those lists are searchable. Like you just hit one letter and it'll organize itself. So, yeah. Uh, yeah, have the, yeah. It's just funny, like these little things you'd assume are easy and often they're not. And to me, it's almost like a can of worms. Like, I don't want to send them there. Like the developers, they're going to sit there for a month working on that list. It's going to be $1,000 bill and still not get it done. I'm like, I don't even. It's like buying an old house and you're like, oh, I want to open up the walls. No, you don't. You don't want to open those walls. Don't open the wall. You're going to find something wrong. You're going to have to fix it. Yeah. Yeah. So I don't want to open the can of worms. There's snakes in there. So, anyways, yeah. All right. Yeah. So down, 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 up, down. So this to me is more bearish than NASI. And so, we want to see at some point, what if the breach is there? Then it'll become technically bearish, huh? Which has already been planned out. So NASDAQ is at the top, but refusing to fall. And S&P 500 is already showing the sign that it's capable, but it hasn't yet. And then we want to look at no diggity, no Dow. Boeing's down 20%. Now they're going to get a strike. The union's going to strike on Boeing. Probably come down another 20%. So look, if you're interested in owning Boeing, you might be able to pick it up in 6 months for a lot cheaper. Because of QuantBox, you may know that you expect a stock market to rally in November instead of September. So that September-October period would be unusually bearish if things happen in the normally unusual way. So that could be the bottom of the market for you if you were going to buy Boeing. So you're like, yeah, let it drop in September, buy it in October, and then the rally kicks in November, December after the election. All right. So anyways, looking at Dow, even more bearish than the S&P. So Dow, if you're a bear, is leading the way, followed by S&P 500 and followed by NASDAQ. So we already have a high, a low, lower high, lower low. Interesting. So if these continue down the next couple of days, I'll probably be buying dollar. Costa's like, hey, the Magnificent Seven, kind of a bubble. Well, it depends on how do you look at it. Do you think it's the fault of those 7 companies that they're overvalued because they're the only companies in the world making more money than God? All they do is make tens of billions of dollars profit every quarter. You feel like, can you blame anybody to for wanting to own them? So there was a time like in the dot-com bubble, let's say, when companies like that were way overvalued because they were worth $1 trillion, but they didn't make any money. You're like, oh well, one day they'll make money. Well, now Google just prints money. Amazon just prints money. Meta just prints money. And so are they overvalued? I don't know. Stupid drawing tool. Right. I don't know. So is it a bubble? I don't know. They make lots of money. People want to own them, right? The question is if do you count Tesla as one of those? And if Tesla's down 20%, are you going to buy it? That's the bigger question for me. Yeah, well, you don't like Elon, that's fine. When you invest in a company, maybe that's the thing you're thinking about. Yeah. Okay. Oh, yeah, 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 yeah. Well, it's interesting when you're like, well, we're putting up satellites into space. So if you're in the middle of the desert or the middle of the ocean, you'll have internet access. You're like, that's interesting. Meanwhile, we're drilling tunnels under LA. You're like, really? Well, that's interesting. Oh, and we're putting computer chips into people's brains. Really? That's interesting. Oh, and we're firing off rockets to the International Space Station. Really? Well, that's interesting. Oh, and we're also building solar farms. You're like, that's interesting. Oh, we have the first all electric car company in the world. We're changing the entire auto industry. You're like, oh, well, that's interesting. Like at some point, like each time it's unbelievable, right? You're like, wow. So, anyways, yeah, whatever. Yeah. Yeah. What's Elon gonna do? Yeah, well, that's the funny thing about the world that we're in now. Um, Elon has a contract with his company and the board has agreed to pay him the money, but the government won't let him do it. Wait, what? You know, or that Trump gets sued for um, doing unfair deals, let's say, with banks on his property loans. But the banks didn't complain. So who dragged him into court? Oh, the government. Stuff like that. Where you're like, banks are not complaining. They did the deals. They're not upset. Well, and there's the government intervention is the stuff that I don't like. Yeah, build a space station on the moon. Yeah. Yep. Anywho, so I don't like government intervention. I'm becoming a libertarian of sorts. All right. So that's what's in play, I think, on this one. And so anyway, so I don't want to go too long today on this video. We're already at almost an hour. So I'll leave it at that, where my leading indicator today is the stock market's coming down, and that would lead us towards buying dollar, which is seasonally as expected. That's it. And we have some seasonality, but I know from experience how to tweak it. And so over the next several weeks, I can keep you informed on how seasonality may be different this year than in other years. So, I can share experience. It won't be quantitative, but it'll be something. Junkie says, great CIA meeting yesterday. Yeah, I really enjoyed it myself. That was really cool. On the other front, the new AI company is moving forward, and we should probably have a functioning service by March 1st. And so I don't have anything more to report than only that it's been worked. I worked on it yesterday, and quite a bit more to do in the next couple of weeks, but I'll know what we'll be able to launch and in what order. So I'm I'm building sort of like, what can we do, and in order, in what order can we do it, and then how long will it take to get to each milestone. But the first few milestones seem achievable by that March 1st, where you could at least log into traders.co and it says, here's the 4 things you should look at right now. And then I think the next wave would be something like, all right, here's the 4 things you should look at now. But if you just cared to know, here's the 3,000 things not to look at. But if you want to look at them, I'll show you and why you don't want to look at them, right? That kind of stuff. And probably have it write you at least one report of the day. Yeah. And then the next wave, so that would be the second wave, I think. This is just me thinking out loud of what I've seen. And then there's another thing that it can do where it can do a deep dive research into one of the best opportunities. So it'll show you like, oh, here's an opportunity I think you should look at. Here's the direction. Here's the entry. Here's the exit. Here's the stop. There's the target. Great, great, great. Here's how long it'll take. And it shows you the technical analysis. And that's it. It just shows you the pattern. I think there will be a premium service where it'll explain in a deep dive analysis, like write you a report on why this particular opportunity is technically high probability. And it would break it down like multiple time frame analysis and everything really into the weeds technically of why this one asset is set to go up or down and how it got to that conclusion. I think that's really cool. Yeah. Yeah. Cool. Yeah. So that's happening. There's a 99% chance now that that's going to happen. So for everyone that said, Wayne, if you build a technical analysis AI, I want to use it. Well, there's a 99% I'm going to be able to deliver it at this point. Cool. So thank you for that. I will see you around. Yeah. Oh, and for those maybe you don't know about it, I need you to put your name on a list. Where's that? I need you to put your name on a list so I know that you care. Get the alert. Put your name here and confirm your email. That's it. It just puts you on a list, and I'm going to start updating you. And the people on the list will have the first opportunity to be on the Whisper. The Whisper sort of launch. It wouldn't be a beta in the sense that it might not work. No, it all works. But you'll get the first taste of the first offerings, and then you can help me shape what we do next. That's really what's important to me. Which pairs do you want? Which What kind of analysis do you want? What kind of, like, what do you want on the calendar? What do you know, and I'll just keep asking you, what do you need? What do you want? How should I roll this out? So consider it's your service. Okay. So that, put your name on that list and we will develop it. And by the end of summer, it'll be perfect. And then I'll roll it out to everybody else. Cool. So, hey, gotta jump. That was real. Peace on earth. May the pips be with you. May our profits be above average. Thank you for all you do. Cheers.